Let's look at the United States government 10-year bond yield. So we can see from the structure that since 2020, the bond yield has been rising a sharp rise from 0.63, where it was in 2020, to a new high of 4.9 in 2023. As we all know, investors prefer investment in bonds. So this is the low we want to take, and this is the high we want to take. So for bond traders, it is important to understand the structure, that the bond structure follows market structure. It's not going to be different from what SAU is doing. It's not going to be different in any way. So we have a beautiful breakout from the structure here. Let's first of all take note of this trend line. This is a nice buying trend line, so I want to take note of that. We can't ignore that trend line. That's a valid buy position. So we are going to watch it on fundamental to fundamental, and we look at the strength as price returns into the structure. We look at the behavior and the prevailing candlesticks that matches into this territory to see if it's a good time to see the 10-year bond continue its upswing. I think the bond is still going to come down. The 10-year yield is still looking for a way to come down. And we have another breakout that have actually stopped this price. Nice one. You can see that structure over there, a breakout of that structure. So we have price create here a supply roof, demand structure, breakout of demand, and final supply, and a retest, and the 10-year yield is going down. So we're looking out for potential long position. Of course, the 10-year bond is still bullish. The 10-year yield is bullish. On structure, you can see it. So what we want to see here, it's a potential pushback into the structure. If it comes back into the structure, we want to see it return back. So we're going to watch the interest rates and also drop in our fundamentals, the relationship between bond yield and bond price and its price movement. Very important for any trader to understand, and how they affect the dollar index and its implication in the financial window. So I'm gonna lie, I'm liking this. Let me see. Let's wait and see the upswing. If price swings out, then we'll find out the most appropriate trend angle and adhere to it. But my most preferred buy position for the 10-year bond yield is going to be at this level. So we want price to dip down into 3.38, then we want to see it go up again from that level. Okay. So I think this is the most accurate structure. After we clone in the floor, we're able to get the roof, and that tells you that the 10-year bond yield is about to move in a sarcastic way. So what we want to see right now is to see now we've updated the roof twice and updated the floor twice, and price is at a place of isolation. So I want to see a situation whereby price makes a return into the structure. A return into the structure. Let's go back and create a see the bond yield rise up to 6.0%. That will be exciting. If that happens, that becomes a good day for investors, where you see here as first supply roof 1, second supply roof 2, and a subsequent sell zone where you will see people cash out from this roof. So that's all we have for 10-year bond yield. And for now,